KKM Financial founder and CEO and CNBC contributor. We just talked to Steve, Jeff, about kind of the setup. You're the reaction guy. If we get a hawkish Powell, he just hits us back over the head with the hawk hammer, what happens?
Well, Sully, I think a lot of wounds are still healing from that 8-minute brief speech he had in Jackson Hole. I don't think tomorrow's going to be in the same stratosphere. However, I think he's going to be consistent with a very hawkish message. And to your point, I think the last time we saw this historic inversion of 73 basis points between the 2-year and 10-year, I think we were watching Magnum PI, Sully. Actually, if you put a mustache on yourself, you kind of look like a young Tom Selleck, Sully. But what's interesting is that I think that this inversion is just not sustainable. But this is deliberate. This is by design. And what does that high front end of the curve mean with the 2-year, the 1-year above 4.5%? That means that the cost of capital is higher right now, and it's going to continue to be higher. So I think the Fed is being very deliberate in keeping this inversion. I think we are going to see this move into 2023 back to some form of normalcy. But I think the Fed is using the front end of the curve in a very interesting way. I know you travel a lot, Sully. When you're driving on highways, you typically see a runaway ramp, a truck runaway ramp.
Yep.
Why do we have those runaway ramps? Those are typically when you see either lose brakes, they lose control to prevent a crash. Well, I think that's exactly what Fed Chairman Powell is utilizing right now by having this inversion at 73 basis points. He's deliberately trying to slow growth. And of course, that's impairing some of the tech names. But nonetheless, this is working. And once they have conviction that we do see inflation going to their unachievable target of 2%, I think that is when you're going to see this pause. And I think that's going to be more represented in the numbers because this is a big week, Sully. We have PCE, we have jobs data, and of course the speech, we're going to be focused on every single word.
No, it's just funny you mentioned Magnum PI, by the way. In the show, his name was Thomas Sullivan Magnum. That's random but interesting. That is my middle name and last name and my dad's name.
It.
There you go.
I love it.
Why are you booking profits in Duke?
Well,
and
Duke
I don't mean the
Energy's
university, I mean the utility.
Fair enough. We were just at Duke University last weekend. But owning Duke Energy has been a safe haven. If you look at utilities by and large, XLU is the proxy for the ETF we like to use to understand utilities. It's been about even as the S&P 500 is down about 15%. Duke Energy is a name that really has seen some exiting. We're booking profits. I'm not selling this. We own this still in portfolios, just reducing exposure, Sully. But I think as you see the front end of the curve, we're seeing more and more clients wanting to own 3-month, 6-month, 1-year notes that are paying 4.75%. So that's why I'm not down on Duke. It's been a great name to hide in 2022. But I think it makes a ton of sense as I do envision the Treasury curve as well as yields coming down.
And buying Amazon.
Well, buying Amazon, it's funny we talk about bonds, right? They're going to be launching their multi-tranche bond deal. If you remember just back in April, Sully, they sold about $12.75 billion of debt. This is for general purposes. So I think it's really interesting as you've seen tech certainly been hammered with the rise in interest rates. The 10-year started in January at 1.5, went up to 4.5%. But I want to own Amazon here. I own Amazon. I'm adding to Amazon as I think the consumer is still in a really good spot. I know the inversion typically precedes a recession or at least has 100% accuracy. But there's also been times this Treasury curve inversion has not preceded a recession. So I think that puts us in a different cycle right now. And the consumer, the household strength of the U.S. economy is different. And owning Amazon, I continue to buy Amazon. I have a sore thumb using Amazon sometimes, Sully. So Amazon makes a ton of sense here. It has been beaten up, kind of forgotten about. And it's the broad swath FANG stock. But I think Amazon is more consumer discretionary, in my opinion, than it is like the true growth tech stock that it was in yesteryear.
All right, good coverage there on the Federal Reserve. I love it.